For young people out there looking to start investing, my advice to you is find things that will pay you money. A lot of you have 0809 in the back of your minds, and you think about the stock market and it collapsed and it can't be the place to be, and you saw your parents fret about it. Well, here's the deal. If you were the worst investor in the world and you put your money, all of it, in the stock market before the 0809 collapse, your money would be triple today. It's very hard to lose money when you're broadly diversified in things that are paying you. You want to own stocks that pay you dividends with companies that are making money. You want to own bonds, which are just loans to corporations and governments, and they're paying you interest or yield that you get to put in your pocket. You want to own real estate, whether it's a duplex or buying publicly traded real estate where you're collecting rent, and after the expenses are paid, you get to put money in your pocket. That's what investing is. The stock market goes up and down, but over time, it's going to make you money. And yes, there are lots of other things that are out there to confuse you, like cannabis startups and cryptocurrencies. Those things are not paying income, which is why you see a very big boom and bust cycle there. A real investor, the real way to get started, the real way to build wealth is to start investing a little bit every single month. Wake up 10 years from now and you'll have a great building block in place for your future. When young folks are starting out, they tend to look at their balance sheet and they look at maybe their car as an asset, and maybe they've bought their first place to live in and they consider an asset. But when you're looking at it from an investment standpoint, those are really liabilities. The way an investor looks at their net worth statement is, what are things that bring me money and what are things that take money away from me? If I have my startup new home, it's taking money away from me. I'm paying property taxes, I'm paying maintenance, I'm paying insurance. At some point, something big is going to happen that I'm going to have to fix. Yes, it might appreciate, that's a maybe, and it probably won't appreciate enough to offset all those things, and it certainly isn't going to appreciate enough to offset assets that bring you money and how much those grow. A car, the day you buy it, it starts depreciating. It's worth less every single year, and in the meantime, it takes money away from you. You also pay taxes, you pay maintenance, you pay insurance. If you invest in a stock or a bond or a property that you're renting out to somebody else or a business, these are things that we expect to grow in value, and while they're growing, and sometimes when they're not growing, you're still getting paid. And so that's the side of the net worth statement you want to focus on. The younger you can start on that, the better.